If you are preparing for Indian Economic Service Examination 2026, this video and this topic is very important. Now, in this video, we will not discuss about the topic per se, but we will see how you can execute this topic in the examination. So, I'll be telling you a lot of tips and tricks about balance of payment, because in the examination, they ask very twisted question, like how to adjust BOP. If something happened, what will happen? Like, for example, if domestic inflation is high, what will be the impact on BOP? If import dependent country is having low foreign exchange reserves, what a country should do? So these kind of questions keep on coming, and where you need to justify your argument in the statement. So this is the fourth video in the 100 days revision series of Indian Economic Service Examination. I hope you have seen the previous three. If not, after this video, you can watch those. These are not interconnected. Okay. Now, if you are seriously preparing for this exam, you know that balance of payment is a very important part, a separate module in General Economics paper 2. Okay. So a part of international economics, but yes, it's a separate module where you will get 2 to 3 questions every time. Now, here we will discuss the majority of those interconnection, because as I told you in my classes as well, connection is equals to selection. So in economics, it is there. If you are able to connect the concept, you are able to get the final selection. Okay. So before starting the topic, if you are preparing seriously, I have a free psychometric test for you, in which 50 to 55 questions will be there. You attempt that question, you understand the level of your preparation. What are your strong areas, weak areas, moderate areas? And there are so much of content in that, you will get the real picture, the mirror image of your preparation, which is absolutely free. Number is given in the description. In the support number, you can request that test. The report will generate after 10 minutes. So 10 minutes is the test. Quickly, instantly, report will be on your WhatsApp number. So make sure that you fill the correct details. Okay, let's start the structure of balance of payment. Now, if you see the accounting definition, if you have studied in the 12th standard macroeconomics, you'll find this is the systematic record of all economic transaction between residents of a country, okay, not citizen, be careful, residents, and the rest of the world. In simple sense, like for example, in your bank account, you do all the transaction with you, one party, and rest of the other people. So on the same lines, balance of payment means a country, for example, India, is having transaction all over the world or with rest of the world. Okay? So it is prepared for a given time period. I hope you understand the difference between flow concept and the stock concept. Like for example, balance of payment is a flow concept, okay, where you can calculate the income coming, the expenses going on. But when you see the foreign exchange reserves, you can calculate till date, like this is the figure of foreign exchange reserves. So it's like simple, in your monthly, the money comes in, money goes out. But at the end of the month, you can see the bank balance in your account. That is a stock concept. Okay. So basic 12th standard concept, but I thought I should revise you. Okay. It shows external economic position. It means it is possible that a country is properly in their domestic structure, but may import or may heavily dependent on imports. So this will show the external economic position correctly. Something happened, like for example, Indian economy is great, but we are net oil importer. It means we are dependent on oil to other countries. Recently, you must have seen LPG crisis happened with the Middle Eastern war. So there is an issue. Now, Indian economy is doing well, but due to sudden shortage or news of shortage of LPG crisis, that hit the hotel industry, restaurant industry. Now, through restaurant industry, if they'll not be able to operate, it will hit Zomato. It will hit the Zomato riders and the IT people working in Zomato. So you can imagine LPG crisis somewhere hitting these people here. So that all interconnection is required when you write answer. Okay. So it's an important topic in international economics and Indian economy both. Connections are important. Okay. So a country may be strong internally but weak in its external sector. That is possible. Okay, for IAS, this topic is very important for the theory, policy, and answer writing. 3 things: theory, policy, and answer writing. This topic is very, very important. Okay, I'm taking all 100 important topics. Okay, all 100 important topics repeatedly asked, multiple time asked in a mixed format. That's why I'm taking this. Okay, now balance of payment has 2 accounts: current account and capital account. Okay, you can see These are the two accounts. Current account generally import exports. Capital account means flow of money, like investment comes in, investment goes out. Okay. So current account includes exports and imports of goods and services. For example, petroleum coming in, pharmaceutical and medicines going out. Okay. It also includes income receipts and transfer payments. Like for example, Indian company here working for abroad receiving income. Transfer payments, a person, suppose for example me working in Gulf countries, US, UK, sending money back to my parents. Okay. Then the capital account. Capital account includes capital inflows and capital outflows. For example, American company doing FDI in India. This is capital inflow for India. If Indian company doing vice versa, that is capital outflow from the country. Okay. So changes in foreign exchange reserves are also important in overall balance. Foreign exchange reserves are a very simple concept. It's like your emergency savings. So your salary is coming, you are doing expenditure. Salary is coming, expenditure. Suppose for example, in some month, expenditure goes up just because you bought something extra. Or you like booked a trip for your family trip. Or you bought a new car, so EMI went up. And these extra expenditure will be funded by the money in your savings account. And so that's what we call foreign exchange reserves. So that's the basic structure I have explained. Now here comes the real thing, causes of BOP. That's what UPSC is concerned about. When you have excess of import over exports, so we are importing too much and exports are not there. So there are several countries, they are import dependent, but their exports are not grown that enough. It means if their exports are there, that are not enough to cover the imports. For that case, they have high dependency on oil. This is we have seen because it is an essential import. It is inelastic in the country. Like in order to function the country needs petrol. Country needs oil, diesels to take goods from one places to the another. Okay, I hope you are getting. So when imports in excess over export, there are so many things. Okay, I'll tell you why. Because when a country is exporting or selling something, okay, I made one more YouTube video on why rich countries, the strong economies can print unlimited cash, still their economy does not collapse. But a small countries like Venezuela, Sri Lanka, Zimbabwe, when they print currency, they struggle and their economy collapses. So I hope you have seen that. If not, you can go and watch that. Now, weak export competitiveness. What is weak export competitiveness? Suppose, for example, I am selling goods in USA. Along with Bangladesh is also selling, Vietnam is also selling. But Bangladesh is having low labor cost because poverty in Bangladesh is more severe than India. So India will lose competitiveness to Bangladesh or Vietnam because of labor cost. Now, for example, that export competitiveness India will lose, and India will lose the market in the USA. So what India will do? Provide extra subsidy. Or maybe because of depreciation, exporters can get benefit. Because per dollar they are getting more rupee now because of depreciation of the currency. Domestic inflation, that also creates problem. For example, domestic inflation, what does it mean? It means I am an exporter exporting things into United States of America. It means in India, I am buying something. I am buying raw material, I am buying labor, I am paying rent. So if suppose, for example, domestic inflation goes up, what will happen? The impact on my export. And my export goods, I have to raise the prices in order to sustain. When I raise the prices, I will lose the competitiveness in the foreign market. So domestic inflation is also one of the causes of BOP disequilibrium. Okay. Exchange rate over valuation. Exchange rate over valuation, I'll tell you in a very simple manner, you will never forget. Imagine that exchange rate over valuation, it means for demand and supply, suppose for example, Indian rupee is 95 per dollar. But deliberately or because of no market adjustment, the rupee is 90 rupees per dollar. Now this overvaluation is considered as tax on exporters and subsidy to importers. Are you getting my point? So tax on exporters. Imagine and understand with this analogy. Okay, tax on exporters, because if devaluation is there, it means per dollar I can earn 5 more rupees, but because of overvaluation of rupee, I'm not able. So it means I'm losing my 5 rupees. Tax on exporter. For importers, if the rupee is 90, then the real value is 95. Just because of overvaluation, importers are paying less. Understand from the real life example. In the month of November, December, when rupee was depreciating, everyone was like, haywire, rupee gir raha hai, rupee is depreciating. At that time, rupee was helping Indian exporters. That is why RBI did not see that much cautiously, and RBI deliberately did not intervene too much, because that was helping exporters, because they heard from the tariff imposed by Donald Trump. But now, in the month of March and April, when the war is going on, this depreciation is hurting us, because right now we are more concerned about our imports, because we need to import oil. Right now it is $80 per barrel. Per barrel means 1 barrel is equals to 159 liters of crude oil. Now the world leaders, or Iran in particular, saying that it will reach to 200. When it will reach to 200, you can imagine how much money we have to give. We have decent foreign exchange reserve, but still. So this is what we call the overvaluation concept. I hope you are able to understand. Large capital flows. In India, if suppose, for example, America is engaged in war in Middle East, American people needs money. They will withdraw money from Indian stock exchange, Indian stock market. So capital will flow from India to USA. It means in India, people will demand their dollar back by giving rupee. So it means the value of dollar goes up and rupee goes down, because demand for dollar is going up. Again, rupee will face depreciation. Okay, that's what exactly happened. In India, it will not happen because we have restrictions on capital account convertibility. But large capital outflows we have seen in 1997 Asian financial crisis, when for the first time Thailand, in the month of July 1997, they have experienced capital outflow, just because they have overvalued their currency. External shocks such as global recession or commodity price rise. So if something happened externally, like global recession or commodity price rise, like for example LPG, oil, crude oil, that is again the cause of balance of payment disequilibrium. Now this is adjustment, very important adjustment. This is what UPSC is concerned about. Expenditure reducing policies. So whenever BOP disequilibrium is there, we reduce expenditure. Like for example, at our household as well. When we have like disequilibrium in our budget, what we do? We stop spending on buying clothes from H&M or Zara to Zudio or to other affordable brands. When you have income, you dine for like 4 times in a month. Now it reduced to 2 times. So that's how you expenditure reducing policy. So government has done the same thing. Like for example, people are importing gold and gold prices are rising. Government will put restrictions on the import of gold, because unnecessarily people are spending on gold. Government does not want. Government wants that we should import oil at this position, not the gold. That is why you can see the gold prices are going down right now. Okay, chalo. Expenditure switching policy. It means you switch expenditure from luxury to necessity, we can say. Okay. Devaluation or depreciation of the currency. This is how we adjust. So in the Asian financial crisis, what happened? That was a currency crisis, and they did not adjust, because if they would have adjusted, the economic crisis would not be there. But you can see that's how we can learn. Import restriction, like I've given one example of gold. Export promotion measure, because your country should produce something so that you can earn foreign exchange reserves. If your production and export dependent on imports only, like for example Reliance Industries Limited, what they do, they import crude oil from Russia and they export to European Union the refined oil. So it means we are import dependent. In India also, a lot of manufacturing happened where input comes from China, and we compete with China in Western market, Western world. So that is again export promotion measure. If you take a good custom clearance, faster that, turnaround time is less, subsidy on the special economic zones. So that's how India export can gain competitiveness. Monetary and fiscal correction is also important. If domestic inflation is high, if government's deficit is high, if government's external borrowing is high, and if something happened to BOP, that's a problem. So you have to adjust interest rates and taxation policy if there is BOP disequilibrium. So you can imagine 1990s, when India was facing BOP crisis. All monetary and fiscal policy corrections were there. CRR was 15%, SLR was 38%, 38.5 to be precise. 53% money locked. Recently you see 3%. Or SLR also. So structural reforms to improve competitiveness. In India, you do structural reforms, but reforms, there's one bad thing about reforms. Initially, they hurt. And in India, you know that government stays for 5 years. Minimum for 5 years if they win the election. Obviously, there are exceptions to that as well. But imagine 5 years, they will stay. But if structural reforms takes time, 10 years, 15 years. So these populist measures in India is difficult to implement because people are driven by short-term comfort. Reforms gives short-term pain later on. Like you remember economic reforms 1990, everyone was worried about that. But what happened? You see, 35 years later, economy is flourishing. Okay? Now balance of payment and India. So India's BOP is influenced by crude oil imports. Important to write in your answer. Okay? Software export, India exports IT services. Remittances, India receives highest amount of remittances in the world from Gulf, from Europe, from UK. Current account deficit creates pressure on the economy. So in India, generally current account, there's always deficit. It is filled by capital inflow. So investment comes in. That's why ease of doing business in India is important. Because if this is not coming, who will fund this deficit? So one there is deficit, another surplus required. So if capital flows are fluctuating, who will fund this deficit? Then foreign exchange reserve, and foreign exchange reserve is limited always. Okay? So external stability requires export strength and macroeconomic discipline. Export strength. That is why in India currently government is pushing export. Smartphone export under PLI scheme, under export promotion, government is doing a lot so that you can also export. Okay? A sustainable BOP position is necessary for long-term economic stability. And long-term economic stability is required to bring the economy at a higher indifference curve, higher we can say pedestal, where India can attract investment. I hope you understand everything. So make sure you connect on this support number for your psychometric test, and one very important ebook I have compiled for you for answer writing. Everything about that answer writing is there. Model answer, how to write introduction, how to add data, how to justify the words asked in the question, like command word, discuss, explain, critically analyze, and so on. And more importantly, the skeleton of the answer. Generally, people struggle there because when they read the question, they are not able to recall what's there in it. Okay? So this is it. And if you are serious about this preparation, you text on this number. I'll give you my 3 hours Indian Economic Service orientation session where A to Z about the examination, what is required. So if you are a fresher also watching this revision series, something is for you as well. Okay? So I hope you enjoyed the lecture. 3 lectures already I have shot. This is the 4th one. It's a 100 days revision series for 2026 aspirants. Make sure you subscribe for upcoming videos. Thank you so much and Jai Hind.